India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Well, 25,000 touch and miss, not quite touch, but almost there and miss. That was the story yesterday. Will we be able to claw our way back up once again? Not very far away from where we left off in trade. This is, of course, a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Nigel and Sonia. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. It's called what? Fear of heights, right? Generally, when the markets touch all-time highs and then they come back from there. This morning as well, Asian markets are not looking that great, but let's see. Ours has perpetually been a buy on dips market, so let's see how it goes.
Maybe the equity markets want to wait by to hear from the central bankers. We have the Japanese central bank that will be speaking a bit from now, and also maybe hearing in from what the Fed has to do and what they have to say with regard to the September potential rate cut. So maybe wait and watch till the central bank action gets out of the way.
A lot of action. Actually, last night was the only day, I think, this week where there was no action.
Yeah.
Because next 3 or 4 days, it's full of action. Earnings. Central banks, as you said, and of course, some economic data with the jobs number. So let's sort of rewind the clock back, tell you what happened and where we left off yesterday. So not a bad picture. Broader markets did well. The Nifty ended flat. The Bank Nifty also flattened out. Banks, of course, have been the weaker indices. Bank Nifty ended down last week as well. One of the few indices which ended the last week down. So, you know, it's been sort of struggling a bit as compared to what the Nifty has been doing. So we came within, I mean, I think the high was 24,999 point something, right? That was the high. So practically for all purposes, you're there. I mean, but you can't print it till you actually hit it, right? So we'll see. So that acted as a bit of a psychological resistance more than anything else. US equity markets ended flat. This is, of course, last night ahead of a wave of catalysts, as I said, which the market will look forward to. The Nasdaq was almost unchanged. The 10-year lost about 2 basis points. The bond yield, that is, dollar index went up about 0.2%. We're at about, what, 104.5. Oil prices, they continue to drop. So there was another 1.5% drop, and now you are under $80 on Brent. In the last 1 month, oil prices have fallen almost 8%. So that is quite a significant fall in a short time span. Now, of course, at the margin, people are talking about what's going to happen in the Middle East, Israel, Lebanon, etc. But, I mean, you're coming into all of this with a sharp drop in oil prices. Now, the big catalyst this week, FOMC, this is on Wednesday, and the June jobs data on Friday. I think these are the two big ones from a global market perspective. And, of course, you also have numbers from the remainder of the so-called Magnificent Seven companies. Microsoft, Meta, Apple, Amazon, all of them will report. And, I mean, you know, more than data and more than policy decisions, because, you know, so much of what the U.S. market has done has been driven by these large mega-cap stocks. Earnings and the direction ahead becomes important. You know, I'll just sort of quickly come back to the levels here. So, once again, for the Nifty, the supports become the averages. Because the 20-day is very far away, about 400 points away from where we left off yesterday. You look at the hourly average, and that comes in at 24,625. That's about 200 points away from where we left off yesterday, because the pickup in the rally has been so sharp, especially last Friday. Even there is a bit of a gap. But, I mean, that's the closest that you could sort of work with as a support level. So 24,625, and then the 20, which is 24,454. On the way up, broadly, I mean, the targets remain 25,000 to 25,337. These are extension levels on the upside. Bank Nifty, it faced selling pressure around the, I mean, basically the 61.8% retracement and the 20-day moving average almost coincided. You know, at the high point, the Bank Nifty crossed both these levels, and then, of course, from there was a very sharp sell-off. So on the way down, the low of 50,438 becomes the important level which the Bank Nifty must hold if the up move has to sustain, even after breaks, etc. And the Nifty Bank needs to take out yesterday's high, which is 52,340. As I said, that coincides with some moving averages like the 20-day, etc. For you know, further up move and further strength to really show up. I mean, you know, lots of catalysts ahead. Not very much last night. Earnings remain an important picture, and I will repeat what I said yesterday. Unlike what we've had till last week, you know, you're starting to see surprises on the upside as well. So, NTPC is an example. Colgate is another example this morning. So at least you're getting beats. These are not big stocks which will move the index one way or the other because they've got large weight. But these are important markers for their respective sectors. So it's not such a bad thing. The opening is suggesting about a 70-odd point lower start. Sonia.
Absolutely. And, I guess this fear of heights is something that you can expect, right? Because of the kind of moves that we've seen in the last many days. So this morning as well looks like it's going to be a slightly red start because across the board, whether it is the Asian markets, a lot of Asian markets are under pressure as well. Yesterday, our own market had a bit of a, tough start to trade, tough end to trade rather. The Nifty fell about 160 points from record highs yesterday. However, if you look at the flows, right, the buying from domestic institutions continues. So there was large buying, almost 5,700 crores of buying from DIIs. However, the selling from FIs is something that is a bit disconcerting. But we're still at record highs and there's no need to be concerned. Little bit of come off is, I think, par for the course. Some stocks that I'm looking at, consumption stocks definitely will continue to be in focus. This morning, as Prashant was also pointing out, Colgate could be the big one to look at. 13% revenue growth, high single-digit volume growth in the toothpaste segment. So this is something that I have a close eye on. Apart from that, ACC as well, strong volume growth. 9% volume growth year on year is what ACC has seen. The numbers beat estimates on that front. So, I'm looking at that stock as well. And auto stocks will be in focus. There's so much action over the next couple of days. There are Maruti and M&M's earnings tomorrow. Of course, you have the Ola IPO that opens on Friday. And then you have the auto sales numbers as well. So we have an action-packed next couple of days in the auto sector. Lots to track. And we'll get you up to speed on all of that. But just purely for today, there are several things to watch out for. There's the US two-day Fed meeting that begins today. There are a lot of big tech earnings that come out in the US as well, whether it's Amazon, PayPal, etc. So our eyes will be on that.
Well, that's right. It continues to remain a buy on dips market. And if you look at the FIs, what they did in yesterday's trading session, they unwound some longs as well as they covered some short positions. So the short positioning went down by close to around 20,000 contracts. They remain net long, but close to around 65% of their positions on the long side. If you look at it in absolute terms, well, at the start of the series, the net long positions from the FIs were roughly around 60,000 contracts. Now, in the last few sessions, that as well has moved up. And as of current reckoning, well, it's holding at around 1.5 lakh contracts. So not overtly net long. In the last series, remember, we saw numbers of closer to around 4 lakh contracts as well on the net long side. So it's at around that 1.5 par for the course, I would say. The client positioning, well, they had moved into the net short positions. And now, in fact, the short positioning is at around that 46,000 contracts. That's on the short side. And, that's the long contracts in terms of lakh contracts that we're looking at. So both of them on opposite ends of the spectrum, but not at extreme levels. So that's how they are positioned. Let's give a word on all three indices now today. Today, the Nifty Financial Services Index, that will play out the weekly expiry. Yesterday, it ended as flat as can be. Today, it could be a move up, particularly in the second half of trade. Then on the Nifty, going by the options data, the 25,050-odd mark, that seems to be a bit of a resistance zone because the 25,000 call is seeing a fair bit of open interest. And the premium out there is roughly around 50 rupees. So that's the line in the sand on the upside. On the downside, the 20 DMA, till that holds out, you'll have to say that it's pretty much a buy on dips market. And moving to the Nifty Bank, that's likely to be the big mover. It did a couple of days of underperformance last week. But yesterday, what was heartening to see was that, in fact, it made a higher low. All the other previous trading sessions, and after 7 sessions, actually, it made a higher low. So that was encouraging to see. Otherwise, you saw that it was a declining trend. Yesterday, it broke that. So getting to the levels on the Nifty Bank then, it's currently in the middle of the 50 as well as the 20 DMA. So till that 20 DMA, is holding out, till the 50 DMA is holding out, you'll have to say that still this one has the potential to move higher. So let's get the absolute numbers then up for you on the screen. Well, the Nifty Bank, the 20 DMA, we crossed it intraday yesterday. We couldn't hold on to that. So that's the resistance zone that you're looking at. The high as well yesterday, closer to that level. The 50 DMA is at around the 50,800 odd mark. You don't want to break that on the downside. You actually want the Nifty Bank to move up. So I think buy on dips continues in terms of the Nifty. The Nifty Bank should be the mover, and the Nifty Financial Services Index plays out the weekly expiry.
Okay, thanks a lot, Nigel, for that. So those are all the cues that you need to watch out for as we begin a brand new day of trade. And of course, there's so much in terms of, global action as well that we're tracking for you. But first up, let's get you some money market views as we begin the day. On the rupee front, Abhishek Goenka of India Forex and Asset Management says that the focus this week will be on the Fed policy. Though the US Central Bank is expected to keep the rates unchanged, the Fed is likely to prepare the market for a September rate cut. fact, if that happens, the market may perhaps be emboldened to price in more aggressive cuts, and this could cause the US rates to rally and the dollar to weaken. He expects that Indian rupee to underperform amidst broad dollar weakness as the RBI may look to correct overvaluation. Abhishek sees the rupee trade in a 82.90 to 83.90 range over the very medium term.
Okay, Vishal Goenka of IndiaBonds.com weighs in on the bond market. He says that bonds rallied last week on the back of technical factors such as global index inclusion, inflows and proposed LCR changes for banks, which may further decrease demand for government securities. This week will give further cues on world interest rates with policy decisions due from the US Fed and Bank of Japan, followed by Bank of England. On Thursday, he expects the RBI to hold rates unchanged in its policy next week, with the 10-year GSEC expected to trade between 6.9 to 6.95%.
Well, we've got plenty of stocks to track for you, but let's highlight the top 10 that we're looking at. We'll get into further detail in just a bit. For the time being, we run you through the list. We're looking at ACC, Colgate, KEI Industries, Data Patterns, as well as Jindal SAW. They'll all be reacting to positive news flow, and we're split down the middle. 5 in the green, 5 in the red. You have HPCL, Kalpataru, Idea Forge. You have Maharashtra Seamless, as well as PNB Housing Finance. They'll be reacting to negative news flow.